Hi, good morning, everyone. Thank you for joining us and welcome to today's seminar, Banking and Finance for Real Estate Agents. My name is Janelle Haynes Cummins, and I will be your moderator for this session. Also on the panel is Mrs. Alexis Lawrence. She's legal counsel attached to Tropical Finance Brokers. Now, as a real estate agent, we know that financing isn't just a final step in the sales process. It's often the deciding factor in whether a deal moves forward or falls through. Today's session is designed to give you a competitive advantage by helping you understand how to better guide your
Let's go,
clients
guys. Let's go back on there.
through the mortgage process, even before they meet with a lender. In today's session, you will learn how to pre-qualify clients confidently, the financing options available to both local and non-residents, common red flags that kill deals and how to avoid them, the power of partnering with mortgage brokers to close more sales, and real case studies of successful deals across the region. Now, before we get started, we have a bit of housekeeping. To ensure you receive the full benefit of this seminar, we kindly ask that questions be kept until the Q&A session at the end. So please feel free to submit your questions through the chat and we'll get through as many as possible. We also ask that you ensure your microphone remains muted, and to maintain the bandwidth, we ask that your cameras remain off. Also, please note that this session is being recorded. Now, I have the pleasure of introducing the speaker. With over 20 years of experience in banking and financial consulting, Sherry-Ann Bourne is a trusted leader in the Caribbean finance space. Having worked on both the lender and client sides of the table, she brings a unique insider perspective to mortgage financing. As a seasoned finance broker, Sherry-Ann is known for her strategic insight, strong negotiation skills, and ability to simplify complex lending concepts. She has successfully guided real estate agents, developers, and buyers through mortgage lending, refinancing, and credit optimization across the region. In this seminar, Sherry-Ann will share practical behind-the-scenes knowledge on how banks evaluate real estate deals and how agents can leverage this help to help their clients secure faster approvals and close more deals. Ladies and gentlemen, Sherry-Ann Bourne.
Hi, good morning, everyone. Thank you so much for coming. I'm hoping that this session is informative, and thank you, Janelle, for doing such a fantastic job on introductions. All right, let's get right into it. Before we jump into the tools, though, and the techniques, I wanted to take a few minutes just to center ourselves, reflect, and reconnect with our personal whys. I know we have a lot of realtors on the island, on the line right now, and I wanted to play this very short video. It's about motivation. It's a reminder that the best version of yourself is within reach, and it starts with intentional growth. All right, so I hope you guys enjoy.
You heard of it? Of course you have. It's why you're here. It does things for people. It makes big promises to people. It creates profits, it creates commissions, it creates cash flow, it creates equity, it creates wealth. Will it do that for you? It makes big promises to people with big dreams. Real estate promises possibility to those pursuing the impossible. It's kept that promise to more people than anything else. It's kept its promise of making millionaires. It's kept its promise of making billionaires. Nothing on the planet has such a track record. It continues to make those promises today. You have a vision, you have a dream. I know you do. Will real estate keep its promise to you too? It depends. What promise did you make to it? Are you interested in real estate, or are you committed to it? Are you committed to modifying yourself, or will you ultimately modify your dream? You can lower the bar, or you can elevate your know-how. You can shrink your dream, or you can expand yourself. Which promise did you make? Or have you yet to make one? Are you going to think about it, or are you going to be about it? This is your dream. Will you do what's necessary to get it? You told people you were going to do this, and they are watching. Some of them are rooting for you. Some are depending on you. Some are hoping you don't make it. Some can't wait to tell you, I told you so. They're all watching. Bold decisions attract attention, and you've got theirs. Promise or no promise, there's no turning back now. You've put your word on the line. You've made an investment of money, an investment of time, an investment in yourself. Did you think this was gonna be easy? Did you just think the planets were gonna magically align to deliver you to your dream's doorstep? Did you think you could do this without leaving your comfort zone? If someone told you that you could, they done told you wrong. Succeeding in real estate is a sport of participation. You gotta show up, you gotta suit up. You have to participate in the lessons. You have to participate in the plan. It's a process. You have to participate in the practice. You see, there's where you are right now, and there's where you want to be. And then there's what stands in the way. And what stands in your way is the lack of a skill set. And you don't need the whole skill set right away. What you lack in skill, you can make up in volume. And what you do in volume, you will build up in competence. And when you participate in your competence, you gain your confidence. And confident participation leads to the realization of your dream. You have to participate in the mistakes you're gonna make. You have to participate in the corrections you'll make. You have to participate in the repetitions. That's how skills are made. That's how you're gonna get yours. It's the repetitions that lead to learning. It's the repetitions that lead to retention. And those repetitions won't get any easier, but you will get better. And when you get better, life will get better. It's those repetitions that lead to mastery. That's how it happens. This is your dream. When you declared it, it became your responsibility to achieve it. So are you in? Are you ready? You are. I know you are. I know you are because I know to achieve your dream, you don't need to see the whole staircase to take the first step. Dr. Martin Luther King said that. You know him? Yeah, he said that. You don't need to see the whole staircase to take the first step, or the step after that one, or the step after that one. You only need to see the first step. And that's easy. And I know you can do that. And when standing on step 1, step 2 is easy. And then step 3 is easy, and so on. The fastest way up that staircase is to step at the speed of instruction. Getting ready to get ready, that's reserved for the ordinary. You are extraordinary. Extraordinary people step fast. They move faster than their doubts. They stay ahead of their negative thinking. They start where they are. They use what they have. They do what they can. They start. They dismiss their lack of resources, and they embrace their resourcefulness. They travel as far as they can see, and when they get there, they see further. And so will you. Because you can't steer a parked car. Correcting your course is easier while in motion than when at a standstill. You must get in and drive. You must be the driver of your real estate endeavor and steer it toward your dream. Dreams fulfilled are a result of the dreamer's participation. Get out of the stands watching others participate in their dream. Get on the track and participate in yours. Those that led you to believe this would be easy, you know who they are. I'm in all the same social media feeds you're in. I see them too. You knew this wouldn't be easy. You wanted it to be, but you knew it wouldn't be. No dream worth achieving comes easy. You knew that. You knew the mission was tough when you took it. Get out there. You got this. Success in real estate is not beyond you. Talent is not required. Consistency is required. Genius is not required. Persistence is required. Money is not required. Discipline is required. It's going to be frustrating. It'll be tiring. It'll feel unfair at times. Sometimes it will feel impossible. It'll be right all there up in your face. You'll get sick of the grind. You'll feel like giving up. You'll look for reasons to. You'll look for validation to. You'll look for permission to give up. And you will find reasons to quit. You will make excuses to quit. But you can't deposit excuses. Excuses don't pay the bills. Those excuses are there though. They will always be there. But this opportunity will not. And that little voice, it's there too. You know that voice. I know you do. If you're thinking, what voice? That voice, the one that's talking to you right now, that's the one I'm talking about. And it won't shut up. It'll never shut up. The whole time it's whispering to you, it's okay. You gave it a shot. It didn't work out. No one will blame you for this. Everyone knows real estate is hard, so take a break. Head back to the couch. No one will notice. No one will see you. They will see you. They are watching. That voice is not your friend. That voice is a monster. And that monster doesn't sleep under your bed. It lives in your head, rent-free. Serve it an eviction notice. Kick it to the curb, out on the street. Don't listen to it. That's what other people do. They listen to it. And if you do what they do, you'll get what they got. Do what they don't to achieve what they won't. Yeah, it's gonna be uncomfortable. It may even be painful to continue, but it'll be more painful to stop. Remember those who said you wouldn't make it? They're watching. Don't give them the satisfaction. And when you feel that you've reached the end of your rope, tie a knot in it and hold on. The only person that can let go is you. Stop focusing on what is happening and focus on what you want to have happen. This struggle, it isn't happening to you, it's happening for you. The pressure is good for you. This is how diamonds are made. You were given this opportunity because you are strong enough to seize it. And it doesn't matter what others are doing. It doesn't matter what the market is doing. It doesn't matter what the economy is doing. What matters is what you are doing while they're all doing what they're doing. I mean, are you winning or are you whining? Real estate, it's the lowest paying easy work, yet it's the highest paying hard work. That's why you're here. You want to get paid. And if you have time to tell people how hard you're working, you're not working hard. I mean, if you're sitting around waiting for the perfect time, if you're waiting for someone to save you, waiting for someone to fix you, waiting for someone to do it for you, you are wasting time. And you can't recycle wasted time. If you want to have your dream as a reality, you will have to become someone you've never been. And you will have to do the things that that person would do. And you're still gonna stumble. You will fail. But that is your opportunity to get back up and do it again more intelligently. That is your opportunity to practice your performance. That is your opportunity to perfect your technique. That is your opportunity to persevere. This is your opportunity to finally follow through. This is your opportunity to win. Second place is not good enough. No, not this time. This is your time. You can do this. Anyone can do this. But most people won't. And that is your opportunity. Real estate keeps its promises to those that keep their promises to it. Your dream will not be a result of what you're thinking about doing. Listen, less dwelling, more doing. Less learning, more implementing what you've already learned. You don't need more learning, you need more discipline. And the road to your dream, it's paved with discipline. But here's the thing, discipline lives outside your comfort zone. So you gotta take the fight outside. And watch this, the sooner you get out of your comfort zone, the sooner you'll realize it wasn't that comfortable. Real estate promises possibility. Your consistent, persistent participation in real estate makes your wealth probable. It promises possibility to you. You must meet it halfway and promise your consistent, persistent participation to get the probability from it. That's the agreement between real estate and you. That's how real estate moguls are made. And you are a mogul in the making. But what if I fail? What if you fail? What if you succeed? Get out there. Yesterday you said tomorrow, and tomorrow is today. You know what to do. Now do what you know. You promised.
I'm hoping that everyone enjoyed that video as much as I did. It really brought out what it is that we need to do in order to succeed. And I know the video specifically spoke about realtors, but it really should have spoken about every industry. All right, so I'm gonna get right into the presentation. What our aim is today is to really bring financing to you as a realtor as easy as possible. It's everything you need to know to secure financing, closing deals faster, and confidently guiding your clients through the mortgage process. Because you're going to see as we go through that financing deals do have a part to play when you're dealing with clients. You need to be able to, if the client asks you if financing is available in Barbados, there are certain terms that you should know that would really bring confidence that your clients will have in you so that they would allow you to guide them through the mortgage process. I wanted to reflect on which part of the video really stood out to you the most. What does the best version of yourself as a realtor look like in the next 6 months? One way to unlock that next level is by mastering financing, because knowledge is power and clients are looking for trusted experts to guide them. Are you willing to become one? So the first slide I wanted to go to is, when you meet your clients, one of the first questions, if they're looking for financing, that you need to be able to address is your client a salaried or a self-employed client, right? A salaried person is going to have a job letter, 1 month pay slip, 3 months salary deposits, and a full credit report. A self-employed client, you're going to have to be looking at financial statements, and then you're going to get those tax returns as well. So what realtors should do, always verify income stability and affordability very early in the process. And we're going to allow you to ask questions, as Janelle mentioned at the end. So if you want, you can take notes as we go ahead. The questions should be placed in the chat, and they'll be answered in the exact order in which they're placed there, right? Now, one of the most important thing I find with clients is that sometimes they think that they're actually salaried when they're really self-employed. So your client is self-employed, even if they pay themselves a fixed salary, once they own more than 50% of a business or a company, a bank will classify them as self-employed, right? And if it's a couple application, then the percentage will be considered cumulatively. So we have some husbands and wives that might split maybe 25-25. If it is that we are assessing the client as a couple, then you need to let them know that the bank will look at them as self-employed once it's more than 50% ownership, right? Just give me, right? So self-employed clients, a bank cannot assist if there is low reported net profits or losses, right? They can't assist if they cannot provide corporate tax returns. Now, this is something that I find a lot of self-employed clients might not be able to do, and it will cause issues. And I know some of you are out there saying, why is it in terms of the corporate tax returns? It's important because the banks are also audited. And one of the requirements is that when they come, they need to make sure the auditors come in. They want to make sure that the bank isn't felicitating something called, and I'm sure a lot of you would have heard this terminology before, anti-money laundering, right? And anti-money laundering actually encompasses tax evasion, right? So with your clients, we're gonna have to look at corporate tax returns if they're self-employed, and even some salaried clients, you're gonna ask for corporate tax returns, because some salaried clients, they get paid huge bonuses at the end of the year. So there's a need to look at the corporate tax returns to get the overall figure for the income, right? Another thing for self-employed clients that banks will not be able to assist is if your client have poor credit history. When we say poor credit history, is there something noted there that they had a bad debt? Or is there a notification of bankruptcy, right? That's going to cause some concerns. And if it is that your client has these issues, we need to address them as early up in the process, because one of the things that Tropical Finance Brokerage does help with is that we do manage clients through the recovery of any sort of poor credit history, right? So if the business is not operating for at least 2 years, unfortunately, that will cause concerns to the bank as well, because banks like to see historic information. So if you're speaking to your client, they're self-employed, and you get a chance to ask them, how much years has your business been in business for? How long your company has been operating for? We want to at least see 2 years, right? Another thing is high debt to income ratios. We're going to come to that terminology a little later on as well too. We're going to really go into depth. What does that term mean, right? So just want to go through this slide pretty quickly again. Banks can't assist, and this is not just any particular bank. Remember, Tropical Finance Brokerage, we are working with multiple banks. So this information that we're giving you, it's going to cover most banks in Barbados, right? So these are the concerns that we're going to have to address very early up. Not that we're saying that we can't get financing if these exist, but definitely we'll have to manage the process differently, right? So you will see right through my slides, I'm going to bring some quotes from very successful real estate agents just to kind of get you to come on board in terms of learning the financing aspect of real estate, right? Because I know it is something that would require you stepping outside of your comfort zone, right? So Ryan, who is estimated net worth of about 40 million US, he says, you're not just helping someone buy a house, you're helping them to navigate the biggest financial decision of their life. Know the numbers, or someone else will close your deal, right? So we want to we want to work with you guys so that you can position yourself as a trusted advisor to your clients. So as I mentioned before, some of the key lending terms realtors should know. We're going to go through these in details. We're going to have the loan to value ratio. There's the debt service ratio, there's the amortization period and the tenor, fixed or variable interest rates, and then we have the pre-qualification versus the pre-approval terminology. So let's get right into it. The loan to value ratio. This loan to value ratio compares the loan amount to the appraised value or the purchase price of the property. So for example, if your property is valued at, or the purchase price is 500,000, but your client is borrowing 400,000, the loan to value is 80%. Most banks prefer anything below 90% for better terms, right? For non-residents, the lowest LTV is 80% if they're Barbadian nationals and 70% for non-nationals. So we are working with some banks who have special terms for, as we will put it, returning Bajans, right? Bajans living overseas, but might be looking for a property purchase, whether it's for retirement or even an investment until they retire. There is a bank that we're working with that gives a special LTV for that type of client, and then which is 80%, so they only have to inject 20% into the purchase. For every other non-resident, we've seen at least a minimum of 30%. Why is this figure so important? You need to know it because when you're speaking to clients, you want to be able to tell if it would make sense for even the client to get financing, right? One of the things is, I know as realtors, you guys, it's very important for you to utilize your time well. You want to make sure that you're working with clients that can have the power, whether it's get cash purchase or if they're deciding to go financing, they have the way all to be able to close the deal. If you're seeing non-residents, Canada, US, no connection to Barbados, speaking about 10%, 15% injection, unfortunately, we can tell you comfortably, there's no bank in Barbados that can offer that low LTV for non-residents. The lowest we've seen is 80%, as I mentioned, for Barbadians living abroad. And even with that, it has to be that the Barbadian is the person who's carrying the loan, right? So it can't be that the Barbadian is being bought on just to approve to get that 80% loan to value. The Barbadian must have a significant salary that salary can actually comfortably pay back the loan amount. All right. The next term is the debt service ratio. This is a very important ratio because it measures the proportion of a borrower's gross income that goes towards the debt payments, right? So gross income is a salary figure before taxes are deducted. So in other words, it's that figure that you see on person's job letters, right? But then the taxes have to come out and then you see the net, which is what you will see on the pay slips. So that's the difference between gross and net income. What banks do is that banks take the debt service ratio of the gross income, not of the net, of the gross. And it works in your favor because if they used to take it for the net, that figure would have been a lot lower, right? So if the monthly amount is 10,000, for example, and the debt obligations is $4,000, the DSCR is 40%. And most banks looks for DSCRs below 40 to 45%. Use the DSCR to advise your clients if their existing loans may affect financing. Now, I want to really touch on this slide, right? Because there are some banks that your clients, there are some international clients who carry very large credit report limits, right? And and it's done for numerous reasons. For example, as you guys would know, if a lot of you follow me on LinkedIn, I've recently become a certified mortgage consultant out of the US. So I did an extensive course in terms of how Americans are assessed for mortgages. And one of the key differences between how we assess mortgages in Barbados versus the US is the credit card limits. The US looks at credit card usage, whereas in Barbados, we tend to look at the limits. But I can tell you that there are some banks who are willing to look at the usage, but it would require your clients to submit at least a minimum of 6 months credit card statements showing that they're constantly repaying that limit every single month in order for the bank to not take that limit into consideration, right? So there are some who assess very similar to the US, but the majority of banks in Barbados do look at the limits. And when they look at the limits, they attribute the 5% minimum payment amount to the limit. So if your client approaches a bank who does that, sometimes they can be disqualified. They will not be approved for the mortgage just simply because the credit card limits is eating up that percentage that the bank is willing to give them towards mortgages, right? So I'm hoping that this slide was covered clearly. Just want to go over again, debt service ratio, such an important ratio. It gives you a proportion of your borrower's gross income that goes towards debt payments, and the 40 to 45% because the bank expects that the other remaining amounts will cover your client's other expenses like food and gas and those sort of things. Now we're going to look at the amortization period or the loan tenor. The amortization period or the loan tenor is the total time to repay the mortgage. So for example, if you hear someone say, I have a 30-year mortgage, the 30 is the amortization period or the loan tenor amount. It's the length of time the client has to repay the loan. Why is this an important term? It can affect the loan payment amount on the mortgage. So the longer the tenor or the longer the amortization period, the lower the loan payment. And remember, when we previously went back to this debt service coverage ratio, we're looking at debt payments over gross income. So if it is that this have resulted in a higher payment, then it's going to affect that debt service ratio that we just spoke about, right? So it's impacted by your client's age. For salaried customers, banks tend to not go past the respective country's retirement age. In Barbados, it's 67. So your client, wherever they're from, whatever their retirement age is, that would be the maximum. So for example, you meet somebody in Barbados, they're 60 years old, most banks will not carry them. They're salaried past 7 years for the loan tenor, right? While if you're self-employed, they might go up to 70 years because depending on the industry that the client is in. Now, I've seen some banks give the 70 to salaried clients, and it really depends on the industry they're in. So for example, a doctor or a lawyer or an accountant or someone that they know for sure can continue to work past the retirement age based on the fact that the role does not require like physical exertions, then you can assist. Like recently, we assisted a policeman out of the US, and we did carry him to 70, right? Because in the US, their police officers are allowed to work past retirement age, right? So it's on a case by case basis, but just for your knowledge, amortization period, loan tenor, we're talking about the total time to repay the mortgage. Now, the other terminology is fixed versus variable interest rates. Fixed rates, they stay the same over the loan term. offering predictability, right? So if you have a client who is risk averse, and I say risk averse, I mean a client who likes things to just stay the same, right? You're going to find that a lot of your clients are going to say, do you offer fixed rates? And I know that some of you are going to have local clients too, and they're going to probably ask that too as well. And I can tell you that in Barbados, we do offer fixed rates, banks do, up to a period of 5 years. The reason why I say up to a period of 5 years is because, for example, in the US, they actually offer fixed rates for the entire life of some of the mortgages. So sometimes you might see clients saying, can I get a 30-year fixed period rate? That's not possible. You're going to maximum time is usually 5 years. And then at the end, if they ask you, well, what happens at the end of the 5 years? The bank reassesses the rate and then they then allow you to do another fixed period, which could be another 5 years. So for example, if your client has a 15-year loan or mortgage, they're going to get that review process if they choose the 5 year at least 3 times, right? There are fixed periods that you can do for a year, 3 years, but the maximum at any one given time is 5 years. For variable rates now, they fluctuate with the market changes, which can increase or decrease payments. So the interest rate that's attached to a loan impacts the monthly payment. So the higher the interest rate, the higher the monthly payment. So if your client chooses a variable rate, and should a bank decide to change the rate for whatever reason in the market, it's going to affect their payments, right? And most banks, when you look at their commitment letters, when they're quoting the interest rate, you would see a term saying, we can change with giving you a 3-month notice period. What that is basically saying is that bank is willing to give you 3 months notice before they make any changes to the variable rate, right? Because once they're locked into the fixed rate for that period, they cannot change it. But for the variable period, they are allowed to change it. And some banks do give grace periods. And they do allow at least a 3-month period where they would write and tell the client, in 3 months' time, your interest rate will be increased and this will be your monthly payment. At that time, your client can then decide if they're going to refinance or liquidate, if the monthly payment is not something that they can manage. So fixed for 5 years versus variable starting at 4.5%, but can change throughout the life of the loan. Fixed rates always are higher than variable rate, and it's because the banks will charge you for the predictability, basically, right? So you want predictability with the fixed rate, then the rate is going to be higher. With the variable, you're going to allow them to be, allow them to be able to make changes. So they do give you a lower interest rate. This rates really comes out when you're dealing with the different currency factors for loans, but we're going to get into that a little later on in the session, right? Pre-qualification versus pre-approval, what's the difference, right? Pre-qualification tends to be an informal estimate of what your clients can afford. So we do pre-qualifications here at Tropical Finance Brokerage. We will sit with your clients, we will get their numbers, very informal. What is your loan payment like? What is your credit card? What I've found is that unfortunately, through the pre-qualification process, some clients are not aware of all the debt that's probably quoted on their credit report. And that's where the pre-approval process comes, because most of the times the bank will then issue something formally saying, hey, you can qualify for this. But to get that, you have to do the pay slips and the credit report, because we want to really make sure that we are giving you the number that is as accurate as possible, right? So pre-approval gives you as realtors confidence in your client's buying power. They're coming out there and they know exactly what they can afford. It's a comfort zone that, you guys can show them properties that for sure they can easily qualify for. And that's why pre-qualification, the realtors that we work with, they always insist that clients get it done before they take their hard-earned time, hard-earned gas to kind of like show clients around the island, right? It's important to get clients pre-qualified. So, Barbara, estimated net worth of 100 million. What does she say? She says the deal is never final until the money is in the bank. Great agents know how to spot red flags before the lender does. And it is so true. If you can sit down and really get to know your clients well, you can spot those red flags before the banks do, and you can really ensure that, one, maybe your client can adjust it, right? We've had clients who sometimes they come in, they have large credit cards, and the bank that we think that they can qualify with easily says you got to reduce the limits. All right, we have that conversation with them very early to see, is this something that they're willing to do, so that we can ensure that we get those limits. It can be a condition for approval, basically, right? But red flags would be high debt, maybe a new period in terms of a job. Maybe the person hasn't been even through probation period as yet. That's going to cause an issue. You need to spot those red flags early up, right? So a quick reflection, not that I want anyone to comment at this time, but I want us to just reflect on this question. Has anyone in the audience lost a sale due to late document submission? And I want to bring this point out because when your clients agree to financing, it's important that they commit to the process, right? A lot of times we're dealing with clients, not necessarily we're in my new role here now, but over the 20 years I've been in banking, sometimes I find clients, they delay with submitting documents, and then they'll go back to you and they say, oh, the bank hasn't gotten back to me, or the bank hasn't told me anything. When truth in fact is that the bank hasn't gotten all the documents. There's nothing that the bank can do if they don't have all the documents to assess the loan, right? So the client needs to commit to the process, and they need to ensure you let them know, like once the application opens, let's try to get the documents in there within 5 business days. Any documents that takes more than 5 business days, speak to us and let us know so that we can manage the expectation of the banks, right? But we don't want to lose deals just because a client is not submitting documents, and late submission of documents can affect approvals. The importance of the credit report. The credit report is such an important document. It's sort of like when you're in school and you were getting your report at the end of the year, and it kind of reflected what you did for the entire term. A credit report is like that. It covers a period of time. Most times it's either 5 to 7 years, depending on the country that your client is in, and it captures how they're paying existing debt. And this report is so important to banks that banks will not extend any credit to your clients unless they have a credit report. So if they're local, usually the bank will pull the credit report on their behalf, but international clients will have to pull their own in most cases. And the credit report it assesses your repayment history and your score. So there's usually a score there. Now I can say that the score is a good indication of your client's credibility. But for example, if you were a US citizen and you decided to reduce your credit card limits, your credit score will be negatively impacted. What we have to do is to tell the client, the bank, why that happened before they get the report. So it's a dialogue that goes along with the process. We said, listen, our client decided to reduce some limits, so it affected their credit score, but there's no concern because there's no other issues with the report, right? And most banks are very comfortable with that because they understand that it does happen, right? Clients should check and address issues very early. And this is even for you as realtors in your personal lives, like as you approach banks, you should know what your credit report says because there are errors, right? Sometimes you can pull a report and there's something on the report that does not really reflect you. You can address it, and sometimes it takes a while to address. So if you're looking to approach a bank, I always say, pull your credit report, look at it and see if there's anything that you could address before you start the processes with the bank. Now, remember I said earlier that the interest rate change is really specific a lot to the Barbados and the US financing. About 2 years ago, banks were lending at US currency at about 4%, right? But because of inflation and everything else that's gone on, the US currency financing has seen a significant increase in interest rate. Early up in the year, last year, we were at 8%, almost double. Currently now we are about 5 to 6%. But it's trending down, but not as fast as the banks, as customers would like, right? So it is always cheaper to borrow in Barbados currency. Now, who can borrow in Barbados or US currency? Anybody can. It's not restricted to your residential status. If you are a non-resident, full, no Bajan ties, you can borrow in Barbados currency. But as realtors, you know that you have some vendors who are selling properties who are going to say, I need to get my money in US currency. That's where the restriction comes, and we need to do the financing in US currency, right? But if the vendor isn't specific in terms of the Barbados financing or US, then the client has the option to finance in Barbados at a lower interest rate. Why is that important? Because most of your clients, they're looking for properties as an investment, and the cost of financing is always put in the calculations of the overall investment in Barbados, right? So you have the rental income, you have the loan payments, that is all calculated to really get their full percentage as to the returns that the property brings. So the lower the interest rate on the loans, the better for your clients, because they're going to see higher returns, right? So that's why you're going to get clients asking you that question. Can I borrow in Barbados currency? And after this session, you can comfortably tell them anybody can borrow in Barbados, anybody can borrow in US. The restriction will be on the vendor. And as a realtor, if you know a client saying, I only want to finance in Barbados currency, then you know that you can only show them properties where the vendor is willing to accept Barbados financing, right? There are foreign currency requirements. Central bank approval needs to be requested for any type of non-resident financing. We at Tropical Finance, we assist the banks that we work with getting this approval once we have the commitment letter in. So your client doesn't have to deal with that, but it is something that has to take place, and it's a formality because most times it's approved, right? So some tips to tell your clients, especially non-residents. I know we're focusing heavily today on non-residents, but in future seminars, we're also going to start looking at some locals as well too. But you're going to find that the information is still very relevant to locals as well. But tips for some of the non-residents is that they should always register any funds coming into the island with the central bank. Unfortunately, we've seen some clients when they get to the point of selling is when they find out this tip, right? One of the benefits of this is that it allows them to repatriate the money. Should they sell the property in Barbados currency, they can easily transfer and take it out of the island, right? So any fund, we have to register funds coming into the island. This is done by an attorney. The form is at the central bank. The banks have to provide advice, credit advice, of the documentation of the funds coming into the bank in US currency, and encourage your clients to get that form from the lawyers. Sometimes you meet clients and the lawyer still has the form, right? Once the form is completed and is signed by the central bank, keep it among your property documents if you're doing a cash sale, right? Open US bank accounts. It's so important. Sometimes we see clients who have Barbados currency accounts opened, but they're accepting US rental income. And then they have the difficulty to get the money out of the island. If you keep the money in a foreign currency, then you do not have to go through central bank to take money out of Barbados. But if you have it in Barbados currency, that's when you have to go to the central bank to get approval, right? So open those US bank accounts, especially if you have US financing when it comes to the loans, right? Because then it means then that the only thing that could finance that loan would be US currency. So you want to make sure you have the availability of US currency by having those bank accounts opened. Working with an experienced accountant that can provide bank-ready financial statements is so important. Like some of your clients, they're going to use these properties for investment, so they're going to have to file taxes, right? Once you earn rental income on the island, you're going to have to file taxes. So you have to get TAMAS. If you decide to do the property in your personal name, you're going to have to do self-employed tax returns. If you put it in a company name, you're going to have to do corporate tax returns. And through our sister company, Malacon Business Services, we do offer this service where we can complete your clients' financial statements and tax returns, and even incorporate companies for them, just to kind of make the process a lot smoother. So, you can message us about that service as well, right? But one of the things is that you just don't want financial statements to be done, especially if you're working with a client who is saying they want to create a real estate portfolio, then the financial statement should be bank ready. And when we say bank ready, we mean that it must be something that supports your client's goals in the future. So sometimes you can have clients who do too much of an aggressive tax management strategy. And then when they go for mortgages, maybe they're looking for an additional property, then the financial statements can't really support that purchase, right? And they have to then kind of go back to their personal income. Lawyers you choose, I don't think I have to tell anybody on the call this. The lawyers that you choose will either delay or speed up the process, right? You need to have lawyers who understand that we mean business when it comes to trying to close these deals. And I know each of you work with your respective lawyers that you have come to trust, and we are ready to support you with that too as well. We do not impose any lawyers on your clients. If you come with one, we're going to use that one, and we're going to try to follow the process through to get them closed as quickly as possible, right? So Tom Ferry, real estate coach, estimated net worth 203 million. He says financing issues delay or kill deals. The pros know how to pre-qualify buyers just by asking the right 5 questions. And I think everybody on the call want to know what are those 5 questions, and we're going to go through those. The first question is, why are you buying right now? Why is that important? It's good to get the motives of your clients, because it will impact whether the client is really committed to the process, because the financing process will require your clients to be committed, right? Have you spoken to a lender or a mortgage broker yet? If they haven't, let's start doing those introductions earlier, right? What is your budget and comfort zone for monthly payments? What your client has to know what they think they're going to be comfortably able to service based on their existing cash flows, right? How soon do you want to be in your new home? We're going to manage those expectations of our clients, right? Because we know that, especially if they're coming from America, they can get their keys in 3 weeks. Unfortunately, we're not there right now in Barbados. We need to manage our clients' expectations so we don't frustrate them, right? Because most of the times they're going to go back home, they're going to talk about their experience, and they're going to say, my realtor was really on point when it came to what the expected turnaround times were, when I'm going to have my keys in, and they're going to be able to manage their times. I remember working with a client who wanted to, as soon as the property closed, he wanted to be in, to experience it. So he had booked a flight, and the flight was a little bit too soon than the closing, right? We really want to manage our clients' expectation so that this time, this process, they can look back at it and see it as favorable, right? Have you bought a home before, and what was your experience like? Now, as realtors, I know that you would deal with all types of clients, but you see a client who is the first time they're purchasing a property, they're going to ask you more questions. They're going to be a lot more intense versus a client who, this is my second home. It might even be their third home that they're buying internationally. They tend to be a little bit more informed, and the process moves a lot faster, but we need to know where you are at when it comes to, is this your first home, right? So that we can really give them that the support that they're looking for, because it's going to be one of their biggest purchases. We want to make sure that they're comfortable. Now, the slide that we want to go into now is the residential mortgage versus the construction mortgage. What is the difference? And I think the majority of you would know, but we just want to kind of just highlight some key differences. Construction mortgages have an interest-only period during construction, right? So there's going to be an interest-only amount. That interest rate is going to be higher because banks see it as a riskier period of time. And it's also a lot more administrative work for banks. So they're going to increase the interest rate, contrary to the residential mortgage, which the construction mortgage then goes into, right? So there are some banks who, frankly, do not offer construction mortgages because they see it as too risky, right? Construction mortgages require a lot more management by banks during the construction period, as we mentioned earlier. Town and country plan approval will be required not only at the end, but also at the beginning. So when those plans are being drawn up, you need to have that conversation with your client. Do they have town and country plan approval? It can really stop a lot of headache. I remember I had a client who didn't have it at the beginning, and then when we got to the end, her guard wall was over the lines and it had to be knocked down. Now that was money that she'd already spent. She now had to find additional money to move the wall. We don't want those kind of experiences for our clients, right? So town country plan approval, beginning and the end. QS reports will be requested at each disbursement stage. That is something that takes place for construction mortgages. And yes, non-residents can get construction mortgages. And at Tropical Finance Brokers, we're here to support your clients. So we do have payment options where they can use credit card links to make payments on these QS reports, because remember, they're not on island, right? So if there is that they need to submit these payments to be able to get these things done locally while they're not here, we're able to provide that service, right? And we ensure that we're working with one that is fast and reliable. So every bank is going to have their own lists. So you're going to be guided a lot by the bank that approves the loan, what QS they're comfortable with. Other mortgage documents checklist. We want a valid ID, preferably, especially for non-residents, we want that passport. And we want the passport in a format where it's free of the being on the bed, might be on somebody's leg. Like, remember, we're giving these documents to banks, right? The bank needs to know that we're taking this process seriously. We want to have those passport pictures clear and free from any fingers or anything. Just want a really good scan copy, ensuring that it's not expired, the driver's license, back and front. We want to make sure we have those documents clear for the banks, right? Proof of address, no older than 3 months, either from the bank or a utility company, right? Offer and acceptance letter is such an important document. You as realtors, you need to have that offer and acceptance letter signed by all parties. I've seen too many cases where the offer and acceptance come, it's only signed by the client, but not by the vendor, because the vendor is overseas, so we don't know if we can get it. No, unfortunately, all banks, they're going to ask you for a fully completed offer and acceptance letter, because it's so important. We need to know what the amount is that we're looking at for the mortgage. Key questions to ask. We're going to go back over this again. Will you be incorporating a company? Very important question. You're going to find a lot of your U.S. citizens are going to be looking to incorporate companies. U.S. citizens have a higher level of scrutiny. There's something called FATCA that all of them they're followed by the IRS wherever they make their money, right? And sometimes their tax advisors will tell them that the best structure is to be in a company. And if they decide for that to be done, and it's a new property that might not already be in an incorporated company, then you need to get that company incorporated. Kaipo recently had a changeover to Business Barbados. I know a lot of you that follow me on LinkedIn, you see my posts where I was raising concerns about the fact that we're taking extremely long for these incorporations. St. Lucia, St. Kitts, Cayman, 2-3 days incorporation completed, right? Your international clients know about these turnaround times. They're comparing islands. We need to get to the point where we start this process pretty early so that we can manage the client's expectation and doesn't hold up the process, right? Because if they get a financing and they want the financing in the holding company's name for tax purposes, then the banks are going to ask you for the incorporation documents. And if we don't have it, then we can't complete the process. So let's get the incorporation process done. And as I mentioned earlier, it is something that we can assist your clients with. What is the currency of the loan? That's another big question. We want to know, are you doing Barbados or U.S. financing? Because we spoke earlier about the interest rate differences. It will impact serviceability of the loans. So we need to know that currency amount very early up in the process, right? What is your proposed injection amount? Not a big question. The bigger the injection, the better the terms and conditions of the loan should be, right? So if your client is willing to inject a little bit more than is even required by the banks, then we can bargain for them to get better interest rates and better terms and conditions. What is the desired length of the loan? Like, I've had a client once, she was 90 years old and she wanted a 30-year mortgage, right? There's something called ageism when they are international that they are aware of, right? And they know that some banks internationally do not have that factor to play in terms of the age. So you need to be able to manage your client's expectation as regard to what the length of the loan can be. And because you can remember earlier, we spoke about that in terms of salaried, we're looking at retirement age, self-employed tend to be 70. But when it also, some clients have something called passive income. So they might have pension or they might have an investment portfolio that can go way past retirement. There are some banks who are willing to take that into consideration and carry your clients way past the 70, but it's on a case by case basis. But if your client's length of loan is a lot longer than, say, they're a salaried, then talk to them like, do you have pension? Do you have an investment portfolio? Maybe that's something that we can pitch at the banks to kind of see if they're willing to give you an extended period outside of the norm, but make it clear to them that it is by exception. So whenever you're asking for exceptions, it will add length to the time that we take to get the loan approved. Will the application be joint or solo? Another important question, because if it is joint, then both applicants have to go through the list of required documents. Both have to produce credit reports. Both have to do tax returns. If it's a husband and wife, and maybe the husband is the one who works, but the wife doesn't, then we can structure the mortgage in such a way that the husband is assessed for the mortgage, but both of them are placed on the deeds. And what this does is it speeds up the process because only one person is assessed for the loan. We recently had an application. It was mom, dad, and son, and all of them wanted to kind of purchase a property in Barbados. And we sat down, we spoke to them, and we said, let the son go forward for the assessment, and then all three of you can be placed on the deeds. Another thing you have to be cognizant of is that there are some financial institutions that once you are an applicant on the mortgage, you're going to ask life insurance might be asked for. So if you become an applicant and you're down in age, you have any medical issues, that can hinder the process as well. So just put in, once the person can deal with the mortgage on their own, there's no need to make the process more cumbersome than it needs to be, right? Top financing mistakes to avoid: not knowing if your client is bank ready, skipping pre-qualifications, ignoring the legal evaluation and processing costs. We are one of the most expensive islands in terms of legal fees. We need to get our clients ready for that fee because we don't want that we're in the middle of the commitment letter and then the lawyers get engaged and then the quotation comes and then your client is, I can't afford this, right? We need to be very transparent with our client as regard to what those legal valuation and processing costs could be. Incomplete submissions, not considering foreign exchange for our international clients. Final realtor tips: pre-qualify clients early. You want to leverage broker support to close. You want to know your bank's timelines and processes. You want to educate clients on key documents and communicate finance ready with all parties. What can you do today? We can pre-qualify clients early. Use a standard intake checklist. We're going to talk about that at the end. We're going to give you, if you're interested in a branded checklist that you can use to complete with every client. And when you're introducing them to us, you can send us that checklist and it would help with the process, right? Refer to the mortgage broker early. I'm available on WhatsApp, calls, emails. You can always reach out. Attend bank meetings with clients. Now, this is a sensitive one because some clients don't allow it. But if you do have a client who really feels comfortable with you being there, why not come along? Throughout that process of being present in those meetings, it gives you the ability to learn. something, right? Once the client lets the bank know that they're willing to have you there and they check with the banks and the banks, that particular bank feels okay about it, I would suggest that you attend the meetings. It's going to also benefit you in terms of becoming really comfortable with the financing process. And Josh Altman says, I don't just show properties, I help buyers win the property. Financing is often the edge. Quick reflection, let's ask. Throughout your years, I know we have some realtors on the call who have been in real estate for years. What is the biggest challenge your buyers face when applying for a mortgage? And let us talk about it together. Let's talk about how we can work together to make the process easier, because it's going to benefit you, and it's going to benefit us as well. Excuse me. Throughout creating this slide, I actually went through a number of real estate training programs just to kind of see what they give to their realtors. And I went through one called Keller Williams training. And she said agents who understand how interest rates, LTV, and DSCR affect affordability are better at qualifying leads and building realistic expectations. And I couldn't agree more. So why partner with us? We match your clients with the right bank products. If you're working with one bank, you're restricting your client's ability to really, one, qualify for the loan, two, get the best product, right? So we're not just working with one, we're working with up to now, to today's date, about 4. And before the end of the year, we're hoping that we can add on a few more financial institutions so that we can really give your clients options, right? We speed up the approval process. We underwrite the loans ourselves. We submit it into the bank so that the loans officers have a well-prepared document they can run with. They have to also transfer it into their own analysis as well, but we assist. And one of the things that we're finding that this works so well with is because this is what we do all day. We'd have nothing else to do but underwrite, review, talk to your clients, deal with the mortgages, submit it to the bank. Loans officers, unfortunately, they have a lot more stuff to do. They got to manage their existing clients, compliance, company training, all sorts of different things. We're independent. We're focused on only mortgages 24/7. There's no reason why we cannot be faster, right? Present complete, well-prepared applications. We help manage clients' expectations, and we support both realtor and client through closing. Finally, my contact details. As Janelle mentioned, I'm the lead mortgage consultant here with Tropical Finance Broker, the founder as well. 20 years of banking. I really think that this was something that was missing from our market, to bring a broker that can really help clients. One client being able to present to 4 different banks. It saves time, right? My email address, sharianne.bourne@tropicalfinancebroker.com. My number, 836-1234. One of the easiest numbers you could remember. The area code is there for your international clients. If they decide to WhatsApp, you can jump on a Zoom call at their convenience to be able to ensure that we can meet your clients' needs, right? Thank you so much for attending. At this point, I'm going to allow for questions, right? But once again, thank you for your support. So far, we've seen so much support from existing realtors that I've worked with over the last 20 years. And I really want to tell them thank you. And I look forward to working with a lot more of you on the call.
Thank you so much, Sharianne. Now, as Sharianne would have mentioned, it is time for Q&A, and I do see some questions were posted in the chat. We have from Leandra. She asks, does the client pay for your service? If so, could you share an estimated cost or range?
Okay, so good question. Your clients do not pay to use us at the moment. The banks are paying us. Every bank that we work with has agreed to pay our fees once the loan is approved, right? So you can comfortably tell your clients, I know some of them internationally wise, US, Canada, there are some brokers who charge, right? But we do not charge our clients anything.
Thank you. We also have a question here from Annalie. How do you obtain your credit report?
Right. This is for you locally or for your client internationally? Just want to make sure I understand that question.
Locally.
Locally, okay. If locally, you can actually go to the credit bureau. You can message me, Annalie, on Instagram or LinkedIn. I can give you contact details. According to the local credit bureau, they're actually supposed to give you one report free of cost. It doesn't include the scoring, but they are supposed to give you, once you go there with your ID, they will give you a full report on you, and you're able to review it and ensure that all the information on there is accurate. You also have the option of paying the $20 to get the full report, right? But I do recommend that you do that, and it's directly through the local credit bureau here in Barbados.
Okay. Annalie says thank you.
No
Paul
problem.
had also asked to mention the email again. So can you please repeat the email address, Sharianne?
Yeah, sure, no problem. It's sharianne.born at tropicalfinancebroker.com. If it is that you need me, if you're having problems with the email, just WhatsApp me, 836-1234, and I can give you the email address there again, right? So 836-1234 is my WhatsApp number, and you can WhatsApp me there if you're having any difficulties with the email, but it's sharianne.born at tropicalfinancebroker.com.
Great. And Paul says many thanks. Do we have any other questions? We have a little bit more time. If you have any questions that you want to post in the chat for Sharianne. Okay, Kimara has asked if it is possible to share the presentation with the attendees.
Yeah, for sure. After this session, we're actually recording it because we are we already have one. We have a YouTube channel, and it's our intention to load these seminars onto the YouTube channel so that you guys can go there and just review it at your leisure, right? So once you follow me on LinkedIn or Instagram, I'm gonna give you the details to the YouTube channel, and we're gonna have this session loaded on there for your ease.
Great, says excellent and thanks. Okay, ladies and gentlemen, we have come to the end of our session. I want to thank you all for joining us today for the Banking and Finance for Real Estate Agents. I hope you found this session as insightful, as empowering as I did. Special thank you to Sharianne Bourne for sharing her expertise and giving us a behind-the-scenes look at the mortgage process, from pre-qualification to closing. Her real-world examples and practical strategies truly highlighted how financing knowledge can transform the way we support our clients and close deals. Then, to quickly recap, today you would have learned how to pre-qualify clients with more confidence, the impact that financing options have on deals success, key loan structures and how to use them to your advantage, how to recognize and navigate any of those red flags that Sharianne would have mentioned before they derail your sale, and how partnering with the right mortgage broker can help you close faster and more consistently. Now, if I happen to miss any of your questions, I do apologize, but you do have the contact information for Sharianne that you can email or you can WhatsApp her and reach out to her directly for guidance. We'll also be sending out a follow-up email with any resources that I would have mentioned today, along with a brief feedback form, because we would love to hear from you. Once again, thank you for being a part of today's session. Stay informed, stay empowered, and keep closing those deals. Have a great day.
Thank you. Thank you, everyone. Thank you.